What's going on, everyone? I just wanted to make another video because since the last video with the whole Pro Toolkit release and whatnot, a lot's happened since then as far as the indicator getting removed from public, so that having to be posted privately, as well as just a lot of questions that's been kind of influxed into the Discord with people that either just don't have experience trading or don't have experience with IFVGs or just trying to change their system up so they can, become profitable. So I wanted to make this video to kind of help you guys essentially know when to take IFVGs whenever you see signals appear. A lot of people that's kind of use the indicator just think it's a simple, oh, I'm buy here when I get a plus IFEG and sell here when I get a dash IFEG, et cetera, et cetera. Unfortunately, there's no indicator out there that's ever going to be that simple. So I wanted to make this video to more or less kind of give people some clarity on what type of trades you should be looking for and when you should be entering in shorts and longs. This strategy is going to be based off of something that I used to trade a lot, which is revolved around Bollinger Bands. I used to trade Bollinger Bands before I traded IFEGs and super trend and moving averages and blah 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 blah. Like, we all started with something, and Bollinger Bands was the one thing I used to use whenever I used to trade options, and get a lot of payouts that way. So my big thing was Bollinger Bands as well as super trends, stuff like that. So today's video is kind of going to be going over a simple way to essentially position yourself into high probability inversion fair value gap setups, or even just moves in general. Like, this could be something that you can implement into your strategy that's not even revolved around inversion fair value gaps, but um, you'll kind of see once I go through it, and it'll make a lot of sense. So right off the bat, first thing you can probably tell is this is the Bollinger Band. So essentially, what it is a deviation between whatever moving average you set. So, like for example, here this is a 200 SMA, and Bollinger Bands reacts to price movement. The outside bands do, and then obviously you have your 200 SMA in the middle. Actually, I think this might be the 50. Yeah, so I'll go over all that stuff with you, but this is based off the 50 SMA right now. But essentially, the idea behind it is you long whenever you're outside of the lower Bollinger Band, and you short when you're outside of the upper Bollinger Band. So it's a really simple strategy. As you can see, a lot of these inversions played out strictly based off of what I'm telling you. And the main reason I want to make this video is because a lot of people just don't know, what type of sweeps to trust. Obviously, the indicator, automates sweeps and validates IFEGs and stuff like that. But, there's some levels that you could sweep that not isn't necessarily significant. So a lot of those can lead to invalidated trades. So my goal is to essentially help you guys avoid those trades. Throw something extra on your chart like Bollinger Bands and position yourself in a high probability setup. So that's what we're gonna do today. But like I said, longs whenever you're below, shorts whenever you're above, no trade when you're in the middle. Whenever you get more comfortable with Bollinger Bands, you can add into your position or enter trades whenever you bounce off the 200 SMA. It's no different than using the 200 SMA as a kind of like moving in a moving average support and resistance line. But at the end of the day, this is going to be strictly based on the upper and lower band. So it's a really simple strategy. Like I said, I mean, you're just essentially waiting for example, a sweep of liquidity, or if there's no sweep of liquidity, you could tap into a higher time frame fair value gap. That's what these boxes are up there, which I'll go over in a second. Like today, the trade I got into today was not necessarily an inversion trade, like it was after the fact. But I also use bookmap. That's part of my trading strategy as well, just to kind of position myself in trades, where we have big blocks of orders. So we had a 1 hour fair value gap here, which I'll kind of show you. It may or may not appear. Okay, yeah. So we have the 1 hour fair value gap here, but we had a big block of orders sitting right underneath it and essentially right in this area. So that's the reason we pivoted so hard today, is because we just essentially had, like, ICT terms, we had an order block, but bookmap terms, I mean, we had an order block. So we hit essentially an iceberg, which caused us to pivot really hard and push to the upside and target opposing liquidity. So me personally, I set a limit order down here and got filled a lot. I think it was like 927.75, somewhere around that range. So I bottom ticked it for the most part. And that was strictly based off of just looking at bookmap and seeing a big old red block going across my screen. So that being inside of a 1 hour fair value gap, I was pretty confident we'd pivot. Um, but anyways, so the goal is you essentially want to have a break outside the Bollinger Bands and a tap into, higher time frame confluence. So whether that's, a sweep of a recent high or a low, or whether that's a sweep of a fair value gap. So most people, they focus on the consequent encroachment of fair value gaps. And if it breaks that 50% level, they're not interested in it. But me personally, gaps need to be filled at some point and they're going to be filled at some point. So I'm willing to trade it up until it gets broken. So in this case, I set my limit order here, have my stop like 5 points away from the low of it. So in case it broke, then I would invalidate it in my book. But essentially, what you're going to look for is a retest of a fair value gap. Then you want to see a either sweep of liquidity, or this could be your liquidity pool right here, which is the fair value gap. And then you want to see an inversion up to the upside. In this case, we were broke outside the Bollinger Bands. We swept the 1 hour fair value gap as well as recent lows. So it's A plus 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 plus, as good as it gets. The only thing we're kind of missing there to make it even better is SMT or a fib retrace, because that's essentially the way I trade. But um the moral of the story is, you're just looking to be outside of the Bollinger Band and retracing into something that's higher time frame confluence. Like I said, hourly fair value gap, or you know, previous liquidity, which this was made probably that was made at 12 a.m. So 12 a.m. to 9 a.m. So essentially 9 hours of price action. We retraced and swept that low. So, that's a significant low to sweep essentially. So um, that's essentially the idea behind it, is just to wait for the Bollinger Bands to break and then wait for a retrace into that fair value gap. So we had a fair value gap up here that I was essentially targeting. Let me see. I think we broke it right around this area. Yeah, so this hourly fair value gap is what I was targeting for my full TP, was up here. We ended up breaking it, so it disappeared off my chart just because that's how I have my settings. But the idea behind it is, you could sweep this hourly fair value gap up here, fill that gap essentially, and then that would be, the the conditions to potentially get in a long play, or I mean a short play. So based off of the 200, we were outside of it, or potentially the 100, we were outside of it on the 100 Bollinger Band as well. It's really up to you on what you want to use, but just kind of gives you an idea. So we swept the hourly fair value gap, like I said, we're outside of the Bollinger Band. So now this is conditions to potentially look for a short. So you could have shorted down here, and eventually, it just kept curving down and down and down, and eventually funneled, and then caught that hourly fair value gap we had previously, which was still extended over, dipped into it one more time, and then pushed out of it, which we had actually reacted to that fair value gap 4 different times. We reacted to it here, 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 and then this was the fourth time we touched into it. So that's one reason I like higher time frame fair value gaps, because they get reacted with so much. And that's why I'll never say, oh yeah, I'm not going to trade it if it breaks 50%, because at the end of the day, gaps get filled. So if you get a rejection and you see an inversion back to the downside, especially with SMT, or have fib retrace or whatever, it's more confluence in my book to take the trade. So that's what I'm essentially looking for. But that's the theory behind it, is just a very simple strategy for those of you that struggle with, which IFEG signals to trust. Is just wait until you're sweeping higher time frame confluence, like I said, whether that's a fair value gap or recent lows that was created 9 hours prior, or whatever the case may be, and then make sure you're broken outside of the Bollinger Bands. That's the biggest thing, because those are considered highly overbought or oversold conditions, kind of like RSI. So definitely would recommend it for a lot of you that struggle with, what inversions to enter with, because I'm sure we had some signals through here at some point today, depending on your settings, and that could have faked a lot of you out on inversions to potentially get in. So, um, like I said, it's a good thing to have Bollingers on your chart, because it can keep you out of this trade completely, and wait for this long to play out, or wait for this short to play out, and if you had, example, the 50 Bollinger Band, we broke outside the 50, you could take that there because we swept this high, inverse back to the downside. Now you're targeting, you could target the lower band, target opposing liquidity, whatever the case may be. But like I said, the hourly fair value gap was still here up until the point where we broke it. So you could have just targeted the low of that fair value gap again, because at some point it's going to get completely filled. But um, that's the idea behind it. So I hope this helps a lot of you out that may be struggling with IVGs and what signals to take and stuff like that. It's gonna, like I said, essentially help you filter out which ones you should and shouldn't be taking. And this happens a lot throughout the day. So you can go back on the chart, like I said, set your Bollinger Band to 200 SMA, and just scroll back to the chart and see where you get IFEG signals and how often they play out. Like even if you didn't get a signal here, you still had an inversion, probably on a higher time frame, like a 2 minute. Probably not gonna be able to find that area now, but I'm sure yeah, right here. So we had a inversion on the 2 minute in this case. So you could have taken that short to the downside based off an inversion. But it's broken outside the Bollinger Band. So that's the key behind it, is being outside the Bollinger Bands. And that's gonna help a lot of you guys out, avoiding some of these trades that are in the middle like this, that appear in the middle of chop, because usually whenever you're outside the Bollinger Bands, that's whenever the move's kind of going to start consolidating, and then you're going to get a big break back to the inside and go back to the downside of the Bollinger Band or the upside, whatever you know direction the trade's playing out. But yeah, don't want to go over the same strategy over and over and over again as far as Bollinger Bands. I feel like it's pretty straightforward. So like I said, for those of you that struggle with figuring out what trades to get in based off the IFVG signals, just add Bollinger Bands to your chart and essentially just wait for it to break outside or of the top or the bottom of it. But other than that, I guess I will go over some changes that we've had to the IFEG Pro Toolkit, as well as what I was talking about as far as it getting removed from the public. So it kept getting reported nonstop because 2 Degrees and Dodgy and whoever else was all pissed off that this got created in the first place. But it is what it is. So nonstop reports, it kept getting suppressed and reviewed and suppressed and reviewed. So it would get taken down, people couldn't find it, and then it get put back up, people could find it again, and then the process repeated like 10 or 20 different times, to where I would like go get a message, somebody's like, "Oh, I can't find it," and I go and try to search it up and it wouldn't appear. And then finally, they actually ended up removing every single indicator I've ever created, plus the IFEG Pro Toolkit. So I had to post everything privately. So if you're interested in the IFG Pro Toolkit, um, it's essentially based off of Dodgy's indicator, but it's based off of my strategies, which is SMTs, Fib retraces, and IFVGs. So if you guys want to use that, I highly would recommend it. Just go in the description. I'll have a link down below. It's a link tree thing, and it'll have all my links to Discord. So we have a community Discord, my personal Discord, as well as my Twitter, as well as a buy me a coffee. In case you want to support me in my efforts for bringing you guys an indicator that can help make you make money, get the payouts, blah blah blah. Not required, just there if you're feeling generous. But you'll also see a link there for the IFEG Pro Toolkit. So just make sure you click on that, and then make sure you favorite it while you're logged into your trading view from that link. And then from there, it should appear in your indicators, and you can add it to chart and all that fun stuff. I will say some people have had issues where they've had to go on their computer to add it to the chart. So if you have any issues on your phone, just log into your computer, or like I said, just make sure you're logged into your trading view whenever you click on the link, because it could redirect you and put you in Google Chrome instead of Safari if you're on MacBook or whatever, and then you might not be actually logged in. So when you go to favorite, it doesn't save, whatever. But anyways, don't want to blab too much. So we did add a couple things. Biggest thing was the entry line extension, allowing you to extend it however far out you want. So if you want to see a reaction to it, kind of like a retest of that inversion, then you can use it in that aspect. And you can also increase the box distance for those of you that want to see retest of the inversion fair value gaps. But all personal preference in that aspect. And then we did some optimization. So out of options, he also creates indicators on TradingView. He went through the script and did a little bit of optimizing, which we're going to go back through and do some more of, just to help with load times, to reduce some of those runtime errors some people have running into, just because there's a lot of information is trying to load on the chart. So using a lot of higher time frame confluences can cause runtime errors, and it'll tell you to remove and re-add to the chart, blah, 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 blah. But biggest thing is a sweep validation. There was some bugs that, essentially whenever you had a fair value gap that would get inversed, and then a sweep would occur later, it'd still use that fair value gap, even though it was previously inversed. So I had to add in a parameter there, so that way that did not happen. But other than that, I mean, that's pretty much everything. There was some bugs where the show BSL, SSL lines wasn't working properly. So when you clicked the button, it wasn't removing the lines. And whenever it did remove it, it would remove the lines, and it would remove the entries and the fair value gaps and everything. So now whenever you unclick it and unclick it, everything stays on the chart. So, those of you that have your own significant key levels marked up, whenever you see these entries plot and whatnot, you don't have to have the buy side, sell side liquidity on your chart. So that's the main reason for that. And then I will also say a lot of people have been asking questions, what's the best settings? What's the best settings? And honestly, it's a loaded question because everybody trades differently. And there's never going to be, the best settings for the best inversion for value gaps to appear because the goal with this indicator is essentially to give you the most customization possible for your specific entry style. So the biggest thing is just kind of take a step back and ask yourself, what is your entry model? If you trade inversion for value gaps, are you trying to enter based strictly off of sweeps of key levels like London lows, London highs, Asia lows, Asia highs, et cetera, or is it based off of something that got created 9 hours ago or whatever the case may be? So just figure out what your entry model is and kind of go through the chart and look for examples where you think you should have seen an inversion and play around with the max candle inversion number because that's the big thing and I'll kind of explain that. So, like, say you get a sweep here on this candle, this starts a tracking process essentially on the indicator. So, from this candle forward, however many, whatever your number is in here, it's going to relate that to however many bars can be created prior to an inversion for value gap. So, let's say 10 candles form but never inverse this fair value gap, but then the 11th candle closed above that fair value gap, it won't plot because you have it set to 10 instead of 11, if that makes sense. So, if you're wanting to see more inversion for value gap entries and you're willing to, trade something that's kind of chopped around a little bit and then finally inverse, make sure you increase the max candle inverse number because that's going to allow you to see more inversion for value gap entries as well. And then as far as ATR multiplier, if you want to see some of those, like I said in the last video, insignificant fair value gaps, I wouldn't say necessarily insignificant, but some of those that might not play out as well. Just make sure you increase this to, zero point 0.5 or zero point 0.1 or 0.05 or zero point 0.1, whatever the case may be. So that way you can filter out some of these inversion for value gaps. Like this one should get filtered out based off of that being at zero point 0.1. But if it doesn't, I'll increase it. Yeah. So that one got filtered out based off of being at zero point 0.1 just because the fair value gap was small. So just kind of gives you an idea. So that way you only get fair value gaps or, a decent size, whatever the case may be. Um, and then I will say there is I don't know if it's necessarily a bug, but in the logic for sweeps on higher time frames, some of the sweeps are plotting but for whatever reason they're not being registered on for an inversion to essentially start a tracking process for it to plot an inversion for a value gap entry, which it's usually on the ones that's like really small sweeps. So like say I'm on the 1 minute time frame and it's using 3 minute liquidity, you'll get like a small sweep here and you can go to a 3 minute chart and see that that sweep occurred there, but I haven't really figured out why it's not plotting that entry or starting the tracking process for those instances. It's a really one-off thing. It doesn't occur a lot, but if you are wanting to see more inversions occur, just switch it to manual for now, and that'll use the chart time frame liquidity. So any of these pivot highs, pivot lows, et cetera, you'll see all these appear. So really just personal preference. Me personally, I don't use the indicator to take entries. It's meant for people that have trouble trying to figure out what inversions they should be getting in. So I guess we'll just leave it at that. But yeah, as far as, like I said, trying to figure out how to get every single inversion to appear, et cetera, et cetera, et cetera, that's the biggest thing is messing around with the max candle inversion. And then the next biggest thing is disabling sweep validation. Sweep validation requires you to sweep a significant high or low depending on the structure mode you select. So whether it's short term, intermediate, long term, whatever, if you have this set to intermediate, you don't sweep anything that's considered intermediate. Um, you won't get a tracking process to start for that inversion that may occur, and you see it occur, but you don't get an entry. So if you're wanting to see every possible entry, uncheck sweep validation and increase your ATR multiplier to, I would say, probably about 0.4. And then decrease your max candle inversion to, I would say, about 6, and then it's going to show you more IFVG entries, like a lot more, but there's no sweeps that are required for them. So that's the biggest thing. Like example here, no sweep other than this short-term high here. No sweep occurred on the intermediate time frame, but we still got an entry. So those are things you have to think about. You got to figure out if you want to see every single one of them. Like, can you prevent yourself from getting in the trade if you know it's not a significant entry? That's the biggest thing. But again, that's just if you want to see all the entries. So a lot of people have been asking that question. Oh, I don't see this IFVG on my chart. Blah 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 blah. Well, it's usually because it appeared on somebody's chart that doesn't have sweep validation enabled, or they might have their max candle inversion number turned up, whatever the case may be. And they could also have it set to, manual liquidity mode or a short-term structure mode. So they're seeing all possible short-term sweeps. So there's a lot of variables that goes into it. Like I said, biggest thing is the customization aspect. So just play around with everything. If you guys have any questions, just like I said, join the Discord. Either Discord, I can ask questions in. So one of them is, like I said, my personal, and then one of them is our community Discord, which pretty much everybody from Twitter has joined. So if you want to be the most see the most active response, I would say join the community Discord, but all personal preference. So other than that, everything else in the indicator is pretty much the same. Like I said, other than the optimization stuff, and then currently we are working on multi-time frame inversion and fair value gap entries. So soon you should be able to see on lower time frame charts higher time frame entries, as well as hopefully fixing the liquidity mode. And I also want to um, add a automated mode to the structure mode, so that way you can see short term, intermediate, and long term sweeps, so that way every possible entry can show up without you having to switch between different modes. But for now, it's you'll just have to pick which one you want and then go from there. But other than that, that's pretty much everything I got for you. I feel like I rambled a little bit, so if you guys have any questions, drop them down below or drop them in the Discord. If you need any help with the indicator, we do have full-time support with all that stuff for the most part, depending on what time of day it is. So more than willing to help you guys out. So yeah, I hope you guys have a great day.